Hello, all. Welcome back to Droplets podcast. It is that time of the year when people go helter skelter to save taxes. Most of the time, because of poor planning, people end up buying products that hardly help them save taxes or avoid them from building a savings corpus. In this podcast, we thought we would bring to fore some grave mistakes that people do in the name of tax saving. Mistake 1: buying traditional life insurance policies. In our small life as financial planners, we have not come across a person in 30% tax bracket who has bought an LIC policy to save taxes. That is because they already bought a 15-year policy when they were in 20% tax bracket. Now go on and Google charges paid on insurance, and you will understand that there are multiple charges like document charges, morbidity charges, GST, etc., that sum up to 20% of premium paid. So to save 20% income tax, people end up paying 20% in other way. So where did they save taxes? So the buyers of insurance policy, all that they achieve is paying charges instead of taxes, and they do not save any money at all. So that is the first mistake. Second mistake: making a lump sum stock market investments. We mean buying an equity linked savings scheme fund at one shot. It is okay to make such an investment under the guidance of an able advisor. Otherwise, generally we have observed that most of the time people make such investments when the market has performed significantly well in the recent past, meaning that the markets are overvalued and not ripe for lump sum investments. Since the lock in period is only 3 years for ELSS funds, people look at the returns at the end of 3 years and redeem their money, since the returns are below average and sometimes they are even lesser than bank FDs. This is because after strong bull markets, the stock markets either cool off or consolidate, and they need to be given a bit longer time to generate average returns or above average returns. So that is the mistake 2: making a lump sum stock market investment. Mistake 3: locking up the money in PF or NPS. There are a lot of people who assume that insurance companies dupe on us and believe that stock market is similar to gambling. They piously put all their money in Provident Fund or NPS, but they fail to understand two things. One is that their money is locked away for painfully long years, almost 15 years. Two is that some of their money is already invested in PF via the salary deduction and employee contribution. Our advice to such people is it is very important to have appropriate asset allocation, and more importantly, PF and NPS mostly give returns that are closer to inflation, which means the money hardly grows. Then there is, of course, the issue of money getting locked up. So when we have an unforeseen situation where we need the money, we either have to sell our assets or get a loan at a higher interest rate, and the PF money is kept away from us. So we strongly recommend that one should not put all their money in NPS or PF to save taxes or for investment purpose. So that is mistake 3. Mistake 4: underestimating the importance of an health cover. One of the weird things that we have noted is that people are obsessed with Section 80C and the 1.5 lakh exemption that this section provides. It is like people almost forget that there are other exceptions under other sections which are very useful. We have a feeling that people have a psych that only if they use the 1.5 lakh under section C will they let be used to you will they be let to use exceptions under other sections. We have to overcome this notion. One of the golden exemption sections that we have is section 80D, which gives exemption up to rupees 1 lakh on health cover purchased for self or spouse and parents. We strongly believe that this is the first exemption that people trying to save taxes should opt for. So that is the mistake 4. Just to rebrief the 4 mistakes that people do in the name of saving taxes. Mistake 1: buying traditional life insurance policies. Mistake 2: making a lump sum stock market investment. Mistake 3: locking up all their money in PF or NPS. Mistake 4: underestimating the importance of health cover. Legendary investor Charlie Munger once said, "All I want to know is where I am going to die, so I will never go there." So we believe through this podcast, we have told our listeners where they will financially die, and we hope that our listeners will not commit any of these above mistakes in the name of tax saving or investment. We still have almost 3 months to go before the taxes on our incomes is sealed. It is quite enough time to avoid making haste in tax saving process and also avoid making waste of our hard earned money. So, listeners, all the best saving taxes. We hope after listening to our podcast, you will take smart decisions and you will be wise. Thank you. Bye bye.